Hello everyone out there, this is Alexander F. Onileri from Kelly Crypto, tracking all my thoughts on what's going on in the crypto world right now. When we had that crash in the 10th of October, most of us thought it was done by a Trump insider shorting Bitcoin with 23 million and making over 200 million. Then the crash continued and we thought it was AI losing its hold on the investors' mindset. But now we see that that's digital asset treasury companies are dumping Bitcoin bigly. Bitcoin is in free fall.
We're closing out another week of losses for the crypto market as Bitcoin's steepening decline continues to drive liquidations and uncertainty.
How Chase actually mirrors exactly what I'm thinking here.
Bitcoin is in free fall. Every chart looks broken. Everyone is asking the same questions. How much lower can it go?
Ivan on Tech said earlier on that all these little DATs opening up look like the things that are going to crash this bull run because they have no leg to stand on. They're just jumping on the bandwagon without any kind of backstory to what they're actually doing. The biggest of them, of course, is MicroStrategy. MicroStrategy is a business intelligence company that develops enterprise software for data analytics, reporting, and mobile intelligence. But in 2020, it pivoted into a strategy of investing and holding Bitcoin as a treasury asset. And Strategy became the largest corporate holder of Bitcoin, which it buys every week, financed through debt offerings. This is Michael Saylor explaining how he did it on the Lights On investment platform.
No one cared at all about the company. And we're either going to basically sell the company, give up, or we're going to cling to life for 5 more years, at which point all of our employees will have quit, or we could do something. We could take a risk. So we looked at it and we thought we can buy the dominant digital monetary network at 1 times revenue. It's growing 80% a year. On paper, it looks just fine. It's just no one ever done it before. The theory isn't that complicated. I mean, the problem was no public company had ever done this before. Right. I'm the CEO of a public company.
Okay.
And I want to do something very risky. But you're the outside shareholder and you think I'm crazy.
Right.
So I say to you, I'm going to go bet the company on Bitcoin, but if you don't agree with me, I'll buy you out your shares.
Got it.
And so I'm going to offer you $140 a share.
$20 premium.
So the way it worked is we announced the $250 million in Bitcoin, then we had a 20-day tender period. We made a tender offer. We offered to buy up to $250 million. The stock traded up, and then it traded above the $140 price, and everyone that didn't like it sold into the open market at north of 140.
Wow. When
the 20 days finished, we had $60 million worth of shares tendered. We paid off the $60 million of shareholders at 140. We had about $175 million of extra cash at that time. We turned around and bought Bitcoin with that. And then Bitcoin rallied, the stock rallied, ran through the roof.
And of course, with the success of MicroStrategy, now called Strategy, came the TradFi financial industry haters in the form of JP Morgan, Chase, Citibank, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, and so on. These banks now seem to be colluding with the left to take down Bitcoin and the Trump's crypto business. So while we're thinking Donald Trump is fumbling the crypto bags for us veterans, it seems this kind of war on crypto still taking place behind the curtains. And this is what played out on October the 10th. It turned out that on the 10th of October, there was an announcement by a company called MSCI, which collates index funds so that private investors can invest in those funds. They made an announcement saying they're looking into whether MicroStrategy would be included in their index funds going forward. But what is MSCI? This is a clip from Financial Interest that explains it better than I could.
MSCI stands for Morgan Stanley Capital International, and they are a financial services and investment research firm that produces tools for investors to use, like statistics, governance tools, and of course, indexes. The MSCI World Index tracks around 1,500 companies, with the MSCI World Index only focusing on developed markets, meaning the smaller MSCI World Index has slightly outperformed the FTSE or World Index over the last 5 years at the time of recording.
Well, I hope you understand that financial interest. MSCI financial index company that provides indexes similar to S&P 500, Nasdaq 100, Russell 2000. These are all tracking funds that allow investors to copy the investments they have in their baskets. It would appear that MSCI, Morgan Stanley Capital International, along with JP Morgan, have now got it in for crypto big time. And along with other traditional banks, have decided to go to war. Here's no second best going in.
Bitcoin's drop from 126,000 down to 80,000 didn't just trigger panic, it unleashed a wave of new narratives about what's really going on behind the scenes. But what if there was another force in the background? A quiet index memo from MSCI that suddenly became ammunition for a JP Morgan hit piece? Could we be watching the opening shots of a quiet war? The White House on one side, America's largest bank on the other, with Bitcoin and Michael Saylor's strategy caught directly in the crossfire. Welcome to No Second Best. Over the last month, Bitcoin has been through one of the sharpest sentiment reversals we've seen since 2022. We ran from an all-time high of $126,000 to $80,000 within a month, and once again, fear took over. But what made this sell-off different wasn't just the volatility, it was the narrative vacuum. Nobody could point to a single clean catalyst. An article on X from someone named Marilyn Hoddle went massively viral. The article outlined a quiet battle happening between a pro-Bitcoin White House and the most powerful bank in America, JP Morgan. And the first battleground isn't Bitcoin itself, it's Michael Saylor's strategy. And why MSTR? Because they're the largest corporate Bitcoin holder on earth. It's the company that proved you can use Wall Street tools against Wall Street, and it's inspiring dozens of other companies to follow the same playbook. Now here's where it gets interesting. Over the summer, JP Morgan quietly hiked margin requirements on MSTR-backed loans from 50% to 95%. That forced a lot of clients to unwind positions or sell shares. Then, months later, another shoe drops. A memo from MSCI, one of the world's biggest index providers, suggesting the removal of companies whose balance sheets are majority Bitcoin. And right when Bitcoin sentiment was hitting rock bottom, JP Morgan suddenly starts highlighting that memo to clients, warning about delisting risk. Maybe it's coincidence, maybe it's timing, or maybe this was a coordinated attempt to scare investors out of Bitcoin treasury companies. Either way, the narrative ignited. Now, most people don't know what MSCI even does. I know I didn't. So let's break it down simply. MSCI builds the indexes that trillions of dollars track. If MSCI removes a company from one of its major indexes, every fund that tracks that index is forced to sell. This is why the memo mattered. It directly affects Strategy, Metaplanet, and virtually all Bitcoin treasury companies. And here's where the fear comes in. If MSCI makes that rule official, passive funds will be forced to dump those stocks, which would create temporary downward pressure. That's why JP Morgan amplifying this memo weeks after it was published set off alarm bells. Was it malice, ignorance, or just opportunistic timing during a sell-off? I'll let you draw your own conclusions, but it seems to have acted as gasoline on an already panicked market. Once the narrative caught fire, Bitcoin Twitter went to war.
Look, I understand. Just like mobile company took over from the big telephone companies, and Netflix took over from all the big NBC, ABC companies. Internet took over from the post office and shopping. Bitcoin looks like it's about to take over from traditional finance. And nobody likes to relinquish power. I understand. So of course they're going to do everything in their power to fight, to own or control whatever new is going on in finance narrative. But I really do think they're fighting a losing battle. But of course they're going to keep trying. Wouldn't you?
Well, Ivan and Tech think so.
I mean, you see, if you are Wall Street, you despise, these guys here, they try to compete with you. Get out of here. BlackRock wants capital to flow into its own ETF, not to Strategy. And of course, if index providers exclude Strategy, the money will flow into the Bitcoin ETFs done by BlackRock. I think BlackRock has all of the incentive to remove MicroStrategy from all of the indexes, to remove MicroStrategy from existence, basically. Because what is interesting is that now we have a lot of these discussions that MicroStrategy may be removed from MSCI. There may be a restructuring in how the indexes are done. And as a reminder, this will lead to an exodus, a massive exodus of capital from MicroStrategy, okay? MicroStrategy is calculated to lose around 8 billion in the very, very first weeks of this exclusion from MSCI. So that's very important. But if you look at the timeline, it is a bit weird because just before all of these MSCI index problems started to become big in the news and really BlackRock dumped MicroStrategy's shares, Vanguard dumped shares, and JP Morgan dumped MicroStrategy shares. Then, the next week, they start speaking about the fact that MicroStrategy should be removed from all of the indexes. And in fact, JP Morgan is pushing for that to happen, because they now have new guidance, they issue new guidance, they have new opinions, and they're pushing the investment community, the Wall Street basically, to remove MicroStrategy and other treasury companies from the index. Obviously, big players, if they knew that the big banks, including BlackRock, Vanguard, and JP Morgan, would be pushing for MicroStrategy to be removed from indexes, big players that knew that, who had that information, they were de-risking already for weeks and weeks and weeks, as we can see here on the chart. If you look at the corporate holdings, MicroStrategy is obviously the biggest. Does BlackRock, think about that, does BlackRock earn any revenue from MicroStrategy? Do they earn a single cent, a single dollar from MicroStrategy? Obviously no. Obviously no. So why would they? Why would they be okay with this MicroStrategy being here, which is done, created, you can say, by an outsider, by seller who is outsider to Wall Street. He's not within the inner Wall Street club. He's not hanging out with BlackRock and JP Morgan and Vanguard. Listen, they're established players. They've been running Wall Street for decades and decades and decades. And here comes Saylor out of nowhere with his brilliant strategy company. Wouldn't it be a shame if somehow it got removed from a bit of index?
And here's Dante from Simply Bitcoin exposing some of the shenanigans going on behind closed doors.
Bitcoin is a decentralized open source protocol that cannot be stopped by any individual or any person. But you can start to hamstring the network when you put financial products on top of it and control the flows for most of the majority of Bitcoin that's purchased in the United States. When you dig underneath of this whole MSCI or Morgan Stanley index thing about the manipulation of MicroStrategy, you take a look at who owns MSCI, and you see the same four players: Vanguard, BlackRock, State Street, and Morgan Stanley. You also see that these are the same people that control MicroStrategy. And then you realize how easily they can manipulate things. They can launch fraud campaigns on MicroStrategy while also shorting MicroStrategy and going long the asset, especially when MicroStrategy is aiming to make itself a more resilient company by launching a $1.4 billion cash reserve system that they did yesterday. They're aiming to become a forever company. And they're also launching products like Stretch, which allow people to get paid 10.75% interest, more than a bank, and they will generate massive fees and have massive inflows that aren't going to go to the Wall Street establishment. So what would I do if I was them? Well, I would short MicroStrategy or own a majority of their shares, and I would go long our products and the products of the other people who control the majority of Bitcoin in MicroStrategy, hamstringing them from the inside. This is how you stop Bitcoin. You don't stop the network, you don't stop the protocol. You create lots of FUD, fear, uncertainty, and doubt around the asset class and the companies who deem it and who are their biggest cheerleaders. Because if they fail, well then how can this network stand up? You need to understand what's going on with MicroStrategy. Who owns the shares? Who owns the products behind all of this manipulation happening? Why did Tim Buckley get replaced overnight by a BlackRock employee who also launched IBIT? You have to start to understand what's going on and why they're going to battle MicroStrategy and Michael Saylor in the public markets behind the scenes by owning their company and their shares.
This was an economic hit job, engineered in boardrooms, timed to perfection, and executed while retail panic sold into the dirt.
MSCI wants to take out any company that is raising money to invest and buy more digital assets, and that has doing this with over 50% of its assets. This is because they don't allow other funds, index fund type companies, to invest in their invest type companies, because it's just getting diabolical at that range. So what happened on October the 10th is that when they made this announcement, insiders who knew this was coming started withdrawing and selling their ETFs and selling their Bitcoin. Here's where I came across a story, Crypto Insider with Rand the Man.
So the MSCI is one of the three biggest index providers, but the bigger deal is that they're always seen as the mavericks, the ones that move pretty quickly, and usually the other indices follow. So what is this announcement actually about? MSCI proposes to exclude from its global investable market indices companies whose digital asset holdings are more than 50% of their total assets. Right now, today, the DAT model, and specifically MicroStrategy's model, is to buy Bitcoin and to use various ways to raise money to accumulate Bitcoin and to be included in many indices, as many indices as possible. And one of the things around MicroStrategy is that they were hoping to get included in the S&P 500. Why is it such a big deal to be included in indices? Because the majority of the investment funds or the majority of the investment vehicles basically just follow indices. And what that means is that anybody who wants to track the index buys all the shares in that index, and it buys them in the proportion that they are to the index. And how do you follow an index? Well, you just invest in an index tracking fund. And what the index tracking fund does is it just buys the exact same amount of that asset every time you put money into it as that asset represents in the total fund. Now, the one thing about indices is that even if a company is big enough or has all the criteria to meet the index, but that company in itself is deemed to be a fund, then it's usually excluded from the passive investable index tracking funds. And so what the MSCI are talking about doing, they want to exclude from its global investable market indices companies whose digital asset holdings are more than 50% of their total assets. And that pretty much refers to MicroStrategy, but also to some of the biggest digital asset trading companies, right? Companies as funds. And as a result of the fact that they're funds, they shouldn't be invested in passive index investment. And that announcement was first made, well, you guessed it, on the 10th of October 2025 by this company called MSCI. And what they're saying here is they're saying in a note this week, analysts say that JP Morgan Chase warned that strategy could lose its place in the likes of the MSCI USA, the NASDAQ 100. As much as $2.8 billion could exit if this MSCI moves ahead. This happened on the 10th of October. They're going to be consulting until the 31st of December, and their final conclusions are set to be announced by the 15th of January. And so we can expect a lot of turbulence and a lot of uncertainty in the market, at least until the 15th of January. Now, on the 15th of January, one of two things may happen. Either this is real, in which case it will be implemented by February 2026. And on that day, the funds will automatically start dumping. Because remember, the one thing about the funds is that the funds don't have negotiation. Either you're in the fund or you're not. If you're in the fund, you get bought. If you're not in the fund, the algos automatically sell. And so what we can see is that if this passes, automatically the funds will start unwinding their positions.
Now, what he's saying is that they haven't totally decided what they're going to do, but MSCI is one of the third biggest index fund companies. So on January the 15th, when they announce their decision, obviously people are going to start selling bigly. And the cascade of smaller companies selling will follow long before February 2026, when this actually comes into play. And other smaller companies follow, and S&P 100 follows. The cascade of crash is going to happen. It's going to be phenomenal. So what am I doing? I'm going to start putting I'm going to take about 70% of my crypto into stablecoins. I'm going to try and see if I can wait till that kind of little lift up before the final crash, so I can get a bigger kind of payback for my coins. And then I'll wait till January the 15th to see what actually happens. Hopefully the 13 billion injection of cash from the Fed, from Jerome Powell, is about to change everything. So until next time, this is Alexander F. Onilary saying, if you want to start a crying party, I'll leave an address down below where you can join me and we can all cry over 70% losses. All right, ciao.